Today, I'd like to talk a little bit about the debt other than the Western debt, as one of the commentators requested, because as we could see, the Western world is, well, definitely over indebted, and we're facing, a sovereign debt crisis. So here's the debt around the world, and the developed nations obviously are the dominant debt holders. The only thing I'll say about this is China. Um, China, if you think about it, they have, we have the national system, and then they have what there's they're regional, like they're big states. They're bigger than states, but they're regional. So a lot of the borrowing in China is pushed down to the regional. So it's kind of hard when you're looking at and saying, what is China's debt? Is do you add in the regional with the national, come up with the real number? That's entirely up to you, okay? This is the United States national debt, okay? But look at the countries: Spain, Italy, Germany, Canada, France, United Kingdom, and the United States. Anybody been watching the news the last 2 days, sovereign debt is definitely looking very, very, very squirrely. And I don't think anyone knows how this is going to work out. Now, this chart looks a little busy, but it's actually not. I want you to look at the red is the 30-year yields of each one of these countries, all right? So the USA, you can see. Now, the black line, you can see that the USA has cut their interest rates 3 times, and even though we've cut the interest rates 3 times, we've gone from 380 to 430, somewhere around there, okay? And you look at the UK, they've had 5 cuts, and they're up, as we said the other day, 1.67% on their 30-year. And it looks like today there is some major intervention in the UK, which caused all the European sovereign debt to rise up a little bit. Prices go up, yields go down. Now, the only reason I mention this is, listen, if there's a sovereign debt crisis, people are not going to sit around and wait for the sovereign debt crisis. They're going to go in and they may start QE again. We don't know. They may raise taxes. They're going to go in and buy their own bonds. We just don't know. So in other words, my only point of this is don't think that these countries are just going to hang around and let the sovereigns just get crushed. Even though we're faced with a situation where, it's deficit social spending. And right now, the bond markets are saying, this is unacceptable. You have to get this under control. Now, if you look down only in the top right one, Japan, you see they've had the 3 rises. They were below zero for 23 years, okay? And now they're 0.25%. That's what they are, all right? But look at their 30-year. It's gone basically from 75 basis points up to 3.25. And their inflation rate is 3.75. This is, as someone said, it looks like Japan will go first, UK will go second. I don't know which one goes first. But again, remember, there are a limited amount of things that can actually go wrong in a global world that would affect everybody. And we always have the 4 main currencies. We have China, we have the Euro, we have America, and we have Japan. They're the 4 big buckets where $300, $400, $500 billion asset manager feels comfortable putting the money, okay? That's what it really comes down to. So even though, look at Switzerland, they have negative yields. We did this, 7, 8 months ago, right? And said it's kind of like a safe haven currency when people don't know what's going on, all right? And so we said there's gold, there's silver, there's the Swiss franc, and maybe, we don't know yet, there may be Bitcoin. It hasn't acted well recently, but again, it's still open-ended question in my mind, but I'm leaning towards that Bitcoin is just a function of liquidity. But look at Germany over here on the bottom left. 1, 2, 3, 4, 5, 6, 7, 8 cuts, and look at their bond yields, right? up from 2 to 3.5%. So we're now about to cut in America again, right? We are stacking the quote unquote Fed, like we did the Supreme Court, the lower interest rates, and everyone's talking, oh, it's about unemployment. I had somebody I saw on X today, same thing, unemployment is so terrible. So here's unemployment since 1950. I'm just going to point out, for the last 100 years, the average unemployment in the United States was 5.8%, or 4.3, okay? And now we have a Trump creature in BLS, and he's going to, whatever. They thought he was going to increase it by 900,000, the unemployment, and he did 580. Look where it is after the 580, okay? So the reason for cutting is this. I mean, all our markets at all-time high. Bitcoin's a little off, maybe about $12,000, $13,000 down, okay? But look at the stocks, gold, silver, new highs today, okay? Why would we cut our interest rates? Why? I have no idea. So we said in the last video, if we watch, and remember, they're totally two different things. The UK situation is different than the Japan situation structurally, okay? They both, in the end, have the exact same problem, that people are demanding higher and higher and higher interest rates for their sovereign debt. And they're leading the way for the rest of us, even though we're going up also, okay? And look at our Treasury. Our Treasury in the last 2 weeks has bought $7.8 billion of the long end bond, trying to suppress it, no different than what Japan did for 23 years. And so what we're doing here in America is we're issuing short-term debt, which we can control better than the long-term debt, and the Treasury buying the long-term debt to keep the interest rates down. So instead of fixing the issue, we're doing more financial engineering. So now I'm going to totally change subjects here, okay? This is total construction on building of manufacturing, factories in our country, okay? Now, I'm only going to point out this because of all the stuff going on with MP Materials, Intel, all right? And they've mentioned that they want to take a stake in every single defense industry. But here, look at this chart here. So here's our manufacturing construction. And believe it or not, it was at an all-time high. That's its all-time high, period, okay? But notice where it started, right there at the end of 2021. What happened at the end of 2021? Well, Biden passed the Infrastructure Act and the CHIPS Act and started investing in America. And look at the factory construction. Now you go over there to the end, the little end at the top there, the last little upside. You know what that was? That was the end of December of 2024. Since the election, we've gone basically straight down on our construction spending. Why? I don't know. You tell me. I mean, are we here to build factories, or are we here to buy the companies that the factories are for? I don't get it, okay? So, obviously, the Western world has a debt crisis, a sovereign debt crisis. And you have to understand something. All these big institutions and these governments, what do they own? They own sovereign debt. And we saw yesterday that, Japan was down basically 15% on their debt. Everyone was down, okay? Everyone was down. And so that puts strain on our financial system because it's the sovereign debt. Guess what we leverage the most? The sovereign debt, right? We can get 99% release. We get the 99% release, and then we lever it again and again and again, okay? So when these bonds drop 5%, 10%, 15%, liquidity is being ripped out of the system. And it's just not the bond. Remember, all our institutions are leveraged to the hilt. So, what do you think we should do? Tell me in the comments, and like and follow.